Hey, what's going on, people? This is your man, Derek Terry, host of I'm Not Complaining, I'm Just Saying, and welcome to another episode. Welcome to another episode. All right, so today we are going to be talking about retirement. Yes. Some of you are like, you know what? I'm just a little bit too young to be talking about retirement. But the way that I look at it, retirement is essential and necessary. And you haven't started it. Um, Teddy the Taxman, who's been involved in taxes and retirements well over, I believe, 4 decades. He's appeared on WBFF, Fox in Baltimore, I believe ABC, but I could be wrong. But he actually used to be my financial advisor, also used to do my taxes. And he's just a great man and a great wealth of knowledge. So he's definitely going to be coming on the show in a bit and to drop that knowledge because believe me, there's some things that you need to know. So I'm going to be real brief. Um, my spot called really, and what I really want to say, or seriously is what I call it. Seriously, that's what we call it. We call it seriously. Is that there are a lot of people that because of COVID are either out of work, their hours have been cut, they're working more, trying to adjust and adapt to COVID. But the one thing that stays constant is that the financial stability, meaning that finances have to come from somewhere and bills are going to keep coming. Bills just don't stop. And as we try to look forward to what we hope is going to be better days with um, the vaccine and people still maintaining social distance and wearing a mask. What I hope is that when you have the opportunity not only to help yourself but help others, please do. I know this segment is going to talk about retirement and why it's important to put things away so you can, when you get to that point to where you don't have to do a regular 9 to 5, you can sit back and somewhat relax. There's people out there that may not be in that situation. So they still would need help. So in any way, anyhow that you can help, it's definitely going to be encouraged and it's going to be appreciated. So with that, I'm going to take a quick break and I'm going to bring Teddy the Taxman. Be right back. All right, y'all. Welcome back. Welcome back. I had to take a quick break. Sorry, I didn't have no commercials through or anything like that. So, like I promised, I have my man Teddy Prioleau, aka Teddy the Taxman, um, all the way from the Baltimore area, here to talk to Charles County, here to talk to the state of Maryland. And look, it may even help some of y'all out there outside of Maryland. But whatever he's telling you, I would take it in. It's going to help you out. This is what we do. So let me go ahead and bring him in as soon as where's it at? Okay, we're going to go ahead and we're going to go ahead and bring in my man, Teddy Prioleau, AKA Teddy the Taxman. What's up, Teddy? What's up, my man? What's going on?
Life is good, Derek. I gotta tell you
Oh, you still banging off that money that y'all got off the Family Feud about 3 years ago?
that. That was fun, Derek. I gotta tell you, man. That was more fun than I really anticipated. Because look, I know you all saw us having a good time and everything like that. But here's something that's scary. When it went to commercial, it got to be even more fun.
Oh yeah, you know Steve Harvey ain't nothing about jokes. He ain't nothing about jokes. We definitely know that. But hey, um, welcome to another episode of I'm Not Complaining, I'm Just Saying, where if you're gonna complain, bring some issues or bring some solutions to the table, and that's what we plan on doing with Teddy the Taxman. So, tell us about Teddy the Taxman.
Hey, good people. Yep, like Derek said, I am Teddy the Tax Man. You can watch me on Fox 45 Morning News. I'm going into my third decade on Fox 45 Morning News. So many of you have been looking at this space right here. I mean, it's a little older now, but you've been.
They say the same thing about me.
Going on, going into my third decade. That's big. And on February 28th, which is coming up real soon, February 28th this year will mark the beginning of my 41st year helping folks out with retirement and taxes. So am I going to pat myself on the back? Oh, yeah, because many small businesses don't even make it a year. Here, I'm going into my 41st. So I'm ecstatic about that. And look, and folks, if you want to find me, just Google Teddy the Tax Man. The television station puts out quite a few of my appearances, ever so often, and you can follow them. And they're still relevant today. They are. And find me also on Facebook. Just type in Teddy the Tax Man, and you will find me. Link up to me. Follow me as much as you possibly can. Hey, Derek, and even though I'm getting ready to start my 41st year, do you believe this? I still absolutely love what I do.
Yeah, and believe me, I've known you since I was, 22, 23?
Woo.
So well over about 25 years, I believe I've known you, something like that. 25 years.
Yep.
And he, even when I owed, he made it fun for whatever reason. He said it could have been worse. And but when I didn't owe, I was definitely happy. So my audience, where I reside in Charles County, but the advice that you're about to give today and that knowledge you're about to drop today can not only be used for citizens in Maryland, but hopefully beyond that. So before we get started, and we're talking about retirement and in some part of taxes, but what is a retirement plan?
Okay, a retirement plan is specifically set up so that you can have funds once you've left the work world on which you can live. Okay, so whether it's a 401k, whether it's a 403b, 403bs are generally nonprofits, a 457, which is a government worker, or a TSP, which is a thrift savings plan that many federal employees can partake of. You need to contribute money to it. And you're going to see why it's even more important now than it was a couple years or so ago. Has putting away for retirement always been important? Absolutely. But now we got to take it up a few levels. And like I said, I will explain to you in just a couple minutes why it's even more important now than ever. Put money aside for you to enjoy life once you've left the work world.
Now, question, when you mean put money aside, do you mean put it in your little cookie jar or hide it in places in the house? And then you hope 20, 30 years later, I've been saving all this money up for you, and boom, here it is. I don't think that's what he means. Now, I'm not saying that's a bad idea, but if something happens to the house, that money is gone.
It's gone, Derek. And I gotta look. I'm very, very hopeful. In fact, I know this is the truth, but that many people who said, "Oh, I don't believe in the banking systems and things like that," those are really our parents. Those were our parents, but even more than that, our parents' parents. Oh, I don't believe in the banking system, so I'm just going to hide my money under the pillow. I'm glad that not many people think that way anymore, because you and I know that that's just not the case. Oh yeah, so you had that problem way back in 1979, and you had the Jeffrey Levitts and things like that. Yeah, you had that, but that was an anomaly. My thing is this: take it from under the mattress and put it in the market. From the mattress to the market. That's the way I look at it.
And one of the things that I remember as a young whippersnapper, fresh out of high school, going into college, is that I didn't really understand taxes, had no concept of what retirement plan was, or it, well, I do now, but was at the time. And I'll be perfectly honest, my, my godfather, I call my godfather not in the biblical sense where, I was Christian baptized and all this stuff with him, but I really look at him as another father who gave me the tools, but he said, you need to start doing this. So you need to do, file your taxes, retirement plan. And I said, well, I don't know who to do, who to find. And then my boy Sean hooked me up with you. And then from there, I understood the importance of a retirement plan. Now, I wasn't that aggressive at first. Now I am. Can you explain to us why it's important to have a retirement plan?
Yeah, all right. You got to have something off of which you can live when you leave the work world. And this is what you're going to hear people say, Derek. I promise you this. Well, I am going to have Social Security. Okay. All right, sure, fine. Social Security. But the other thing is this. There are very, very few people who are going to have as much income in retirement as they do during their work years. That's just a fact. That's just a simple fact. So if you're making $70,000 a year, I don't know where you're going to get $70,000 a year upon retirement. I have no idea. You're not going to get it out of Social Security. Maybe your pension will help, but the whole idea is to have different sources of retirement income. The 401k, your pension plan, and your Social Security at minimum, Derek, because again, and I got to keep emphasizing this until you get tired of hearing it. You're going to have way less income while you're retired than you are while you are working. That's a promise. So get this.
Now, you had me think, I was trying to think how many I had, and then when I count my wife, I'm at five different means to get a retirement. 5.
There you go.
So
man,
if I count my wife, so we probably, between both of us, we may have 10 different sources to draw on retirement.
That is very good. That is, I'm telling you, and that's what you're gonna need. You have to, I'm gonna keep on saying it until people really get it. You need as many sources as you possibly can get. That's number one. Number two, start early. For those who are listening to me, talk to your children and talk to your grandchildren about how important it is to start saving for retirement now at 22, 23, 24, 25, which they're not thinking about retirement. But their parents and their grandparents in some cases, we know. Why? Because our generation did not do a very good job of saving for retirement. So now, look, we couldn't even make our bills. We couldn't meet our bills and obligations when we were making $70,000 a year. What do you think it's going to look like when your retirement income for a year is only $30,000 a year? I can see it now. Filing for bankruptcy at the age of 80. Wow. And that's real life, Derek. I see it probably once a month.
Now, this kind of brings me to the next question. And I know one of the reasons, well, put it like this. I was somewhat reluctant way back in the day to seek a retirement plan because I'm tight. I'm so tight. If you charge me a penny over, I'm like, for real? Seriously? The principalities of it. But what are some of the things that you heard why people, for whatever reason, will not start a retirement plan? Or they say, yeah, I'll get to it later. What are some of the reasons?
Hey, you know what? I need every penny that I get in my paycheck. Oh man, I can't afford to put money away. And see, if that's the case, you are living above your means. I don't care what anybody else says. If your money is that tight, you are living above your means. And if you look closely at many people's situations, spending their money doing the wrong thing or too much of it on something that's unnecessary. I'm not going to name any Any vices? Well, yeah, I am, because I'm daring like that. And so are you. Look at how much money we spend on the lottery system. And it is bad. It's really, really bad. And I'm gonna tell you how you know somebody's really got it bad. When you hear and you probably never thought about it like this, Derek. When you hear a person say, "Oh man, I forgot to play my lotteries," they own it.
Yeah.
My. When you hear a person say, "I forgot to play my lotteries," they own it. That's a person who plays probably 5, 6 times every week. So they play 5, 6 times every week of the year for how many years? 5 years, 6 years, 7 years, 8 years, many way more than that. 2 months down the line, 3 months down the line, they win $1,000 and they're happy.
Yeah, and they don't, and they probably may have spent $2,000-3,000 or broke even.
Oh no, you're being nice. No, not no $2,000-3,000.
I don't know. I said I may bet like when the Mega Millions maybe 800 million. I go ahead and bet my $10 worth, and that's about it. So I'm at the most I may spend is maybe $30-40 during the course of a year. But even when the casinos were open, I typically don't spend my own money. I get the free money that they give me, and I go straight to blackjack, and I win, and I'm gone. Once I get,
that sounds like Derek. That sounds like Derek.
You know me, man. You know me. Hey, but all right. So you know, moving on. COVID-19. We know, and you know, within your profession, it has adversely impacted some people, more likely in a negative way, and unfortunately, and I can't really say unfortunately, some people have benefited. But when we look at the retirement plans, how can they salvage or resalvage that because of COVID? Have you seen where some of your clients have taken a hit because of COVID-19 for whatever reason?
No, not a market hit. Not a market hit, but more one of, okay, I got to take funds out because I'm laid off and I can't meet my bills and obligations, or I've been fired, I've been released, or the company went bankrupt, or the restaurant closed, or whatever. That's why most people are taking hits. But I'm going to tell you, Derek, the market is doing fine.
Now, quick, like I have a friend, you know, of course, you know, he feels that he knows the market. I really don't know. But you've been in this game for about 40 years. This is what you specialize in. Now I have a TSP, so I kind of roll my thing about. But what really impacts the market? Is it politics? Is it what happens overseas?
Oh,
But we're talking about in the long run, what really affects the market?
Derek, it's not one thing or two or three or four or five. It's not 500. There are literally tens of thousands of things that can affect the market. So, first of all, if you ever hear me say, Derek, I can predict the market, then you need to kick me wherever you can kick me. I don't know the market. I can't predict the market. I can't tell you what's going to happen a year from now, 6 months from now. You know why? Because Brexit, you know, that's Britain leaving from, right? Okay, that could affect it. Happenings in India can affect it. War can affect it. Politics can affect it. Any one of those and more can have an effect on our stock market. So let me share this with you, because I get this question every 4 years. Every 4 years. Hey, should I take my money out of the market? Because you know, Teddy, there's an election coming up in a couple months. My answer 20 years ago, 22 years ago, 4 years ago, the same as the answer I'm about to give you. Never pull your money out because it's an election year. Never do that.
And
You
and I agree because it's almost like gas prices. One person doesn't regulate the gas going up or down. Some reason people think it does, and I know enough from going overseas to really know why the prices are that way. I let
yeah.
people
Oh
figure that
yeah.
out for themselves. I'm not gonna sit here
Yep.
and try to re-educate people. They got their beliefs. It is what it is. But that brings up an interesting point because as we talk about the market, there's some people that well, let's put it like this. How many people of color, because I don't know too many people in Charles County where I live at, in this area, that have any stake in the market outside of what they do with their retirement plans. So how do we get, I'm saying, is it a benefit to be in the market? Or is it a benefit
Oh
just to
yeah.
make sure that you're doing something within the market as it relates to your job? Like you don't necessarily, like if you're a TSP, you're technically in the market.
Yeah. Oh yeah.
Yeah.
If you have a TSP, a 401k, 403b, 457, any one of those and a few others, you are in the market to a degree. You are in the market. No ifs, no ands, no buts. Okay, you are in the market. I think what you're talking about, Derek, though, and I think I heard you say this is, oh yeah, yeah, yeah. But I'm talking about outside of that. That's what you're talking about,
Yeah.
right?
Uh-huh.
All right. Let me tell you, very, very few families of color. Very, very few. It comes, and there isn't any one reason for that. There are many, many reasons. Number one, the education. Derek, when I go to a conference, if there are 70 participants, there might be 4 African Americans. So where do you think the information is going? And so what I try to do now, you already know this, but I'm going to say this for your viewers. I want to educate everybody. When I finish doing what I'm doing and I hang up my computer, I want everybody with whom I've spoken to say, Teddy educated me on taxes and or retirement.
Yeah,
But I really want to do it with the folks who don't get to hear this anywhere else. That's my objective. That's why I live. That's what I do. That's why I do what I do. To educate. To educate.
and I think the other thing is, I think in this day and age, especially people my age or maybe a little bit younger, you really don't have an excuse when it comes to, well, I really don't know anything about the market, so I'm not going to get involved in it. Because what we have, people talk about reforming the system and whether racial equity and all the other things, but at some point you got to say, you know what, I can do some research. Why? And you have this, you have this.
That's a
So
powerful tool, Derek.
and my show is just really just one of many. But this is one way that I can reach out, not only to my people, but just people in general who don't know anything about the market and can educate themselves on what they need to do to get themselves to the point to where they have a retirement plan. Now, unfortunately, some people may not financially be able to put themselves in that situation, which brings us to the stimulus checks because of COVID. And we've been talking about COVID, it's gone out to millions. And you brought up something interesting to me that I had no idea. Well, let me put it like this. Let me just phrase it in a question and you kind of answer the question for me. What's the criteria to receive a stimulus check? And with these extra funds, does it impact your taxes?
Ah, let me say this. I have to reassure your listeners. You will not be taxed on your stimulus. I don't care how much you receive. And there are different amounts depending on your situation, but you will not, and please spread this. This is the one thing I really do want you to spread. You will not be taxed on your stimulus payment. You will not. Let me tell you how it affects your tax return, though. Golly, but you just said you won't be taxed. Hold up. listen to me. What'll happen is you will show on your tax return the amount of the stimulus that you received. If you received none for whatever reason, you will put that on your tax return.
Now, quick question.
And that,
Quick question. Will they send that to you? Because will the IRS send that to you? Say this is how much you got, or you have to remember it?
no, they will send it to you. In fact, you should have received it, I don't know, a week or two after you received your stimulus. You don't remember that? The president signed it. It said, hey, something to the effect of, hey, you got your stimulus and this, that, and the other. And the amount was this, that, and the other. What they didn't tell you, unfortunately, was you should have saved that, because your tax advisor will ask you that question. How much did you receive from the stimulus payment, or of the stimulus payment? How much did you receive? And that's important, because what will happen is, if you were supposed to, for whatever reason, not for whatever reason, if you were supposed to receive a stimulus payment and you never did, you will put on your tax return. Let's say you were supposed to receive $1,200. You will put on your tax return, I received none. What will happen is you will get that $1,200 through your tax refund.
But you can't lie though, because if you lie, they're gonna catch you, right? Some say, well, no, I didn't
Oh,
get it.
if you lie, if you are deceitful, Derek, lie is too strong a word. Let's use deceitful. How about that?
All right, well, I'm just telling people out there, tell the truth. Truth will set you free. If you don't tell the truth, you ain't gonna be free.
Yeah, what will happen? One of the questions that I asked early on was, okay, suppose the amount that goes on your return that your tax advisor put in, or the amount that you told the tax advisor, suppose that's wrong. Typically, what happens, Derek, is let's say your tax return is e-filed and your social security number is incorrect. The IRS will kick it back and say, Derek, change this, because your social security number needs to match up with your name, not with the stimulus payment. If you put it in there erroneously or intentionally wrong, don't worry, the IRS will catch it. They're going to match it up to what they have on the system, and they're going to correct it. So listen, please. There's a chance that you're going to get a letter. Some of your listeners are going to get a letter, and it's going to say, hey, your tax refund was erroneously prepared. The numbers were off or something like that. The primary reason why that's going to happen is that stimulus answer.
Okay. So
if you put it in wrong, they're not going to reject the return, Derek. They're not going to reject the return. They're going to let it go through, but they're going to make the adjustment. So let's say you got $1,200, but on the tax return you put down that you got zero. It means now your refund, your tax refund, looks like it's $1,200 more. But when you get it, it's actually going to be $1,200 less, because it was calculated wrong. You put the wrong answer on the right line.
So if you calculated wrong and they send you a refund and you ain't got to pay it back, pretty much, right?
Oh, no.
What I'm saying is, if you by error or whatever it may be, say you got, I don't know, 600 and you forgot, and on your refund you got 600, you say, oh, I did get 600. So what happens to that 600 that you forgot to put on there?
That's not going to happen. And that's what I'm saying. What'll happen is,
I think what you're saying is that before they even process the refund, they would already figure it out.
Yeah, there you go.
And what about those places you get it? Well, the instant refund. Like, I ain't gonna publicize names, but you get that instant refund.
I think there are going to be a lot of problems this year, because you're going in, the client is going in and saying, hey, I didn't receive anything, right? And so the tax advisor puts down zero. Now it looks like that refund is $1,200 more, for instance, $1,200 more. Now you've gotten a loan on whatever the amount is. That's going to be a problem, Derek.
Okay.
All right. you I don't know how much you're going to hear of it, but that will be a problem. I promise you that.
So heed the warnings, people, as we, you start to get some of this good advice, and you get to the point where you file your taxes. So, are there any new tax laws that we should be aware of? Any retirement type issues that we should be aware of for the 2021?
First, let's start with an old law. There are going to be folk who are going to go and have their return prepared this year, and their refund might look like it's $2,000 less. And they're going to go, oh man, something's wrong. The tax preparer must have done something wrong. I don't know, maybe something was calculated wrong. No. Let me tell you what's going to happen. People who were eligible for the child tax credit, and that's a credit that you get if your child is under 17 years of age. Let me say that again. Under, not 17 and under. But if your child is under 17 years old on December 31st, your child qualifies you for the child tax credit. That child tax credit is a biggie. That child tax credit is $2,000. I mean, altogether, it might be $2,500, right?
Oh,
so that's $2,000. So,
okay. I was trying to say,
all right,
is there a cap on how many? I'm just curious. I don't
know. No. Mm-mm. Okay. So if you've got 4 children under 17, that right there is an $8,000 credit. Can you imagine that? That's an $8,000 credit. Now, of course, if you do have 4 children under 17, you're probably being driven crazy at home, but that's another story, right? Right? So what has happened, or what probably would have happened, is if your refund is down by about $2,000, and that's what you want to look for. You want to look for that $2,000 figure. I'd be willing to bet you it's because your child turned 17 in the year 2020.
Oh, okay.
So look out for that. Look out for that. But in the same vein, I say that the tax advisor should have warned you about that when he or she did your return last year.
Yeah, but everybody doesn't look. Everybody ain't got to tell you tax man. We may not because you don't do taxes anymore. So, well, do you stop? Because when you stop, I had to go out there and find somebody else. You almost hurt my heart. But my LB, I'm gonna put a plug for him, Tim McFadden, Legacy Tax Services. That's who does my taxes. He's based out in Rice.
Right.
But he just basically picked up where you left off. So you definitely have to have a good tax person who is definitely on the phone with the IRS. I'm talking about, you talk to IRS probably more than I talk to anybody. I was like, on the phone with it. It's almost like you got a speed dial.
Oh yeah. Yeah, and Derek, that might be 3-4 times every day, which means being on hold on average a little bit less than an hour. That's a lot. That's quite a bit, my friend. And so, when you do make that relationship or establish that relationship with your tax advisor, that's what you should be doing, establishing a relationship. And so, that tax advisor, and of course we jumped to another subject, but that tax advisor should be there for you year round. Now, I'm not talking about now taking vacations and things like that. What I'm saying is a true tax professional that, who you want to lean on probably should be there year round. Because think about it, if they're in and out January through April and you get a letter in September, what are you going to do? Wait until January when they come back to the office? I'm not knocking any part-time tax advisors. All I'm saying is, we need to be there for our clients. No ifs, no ands, no buts.
Yeah, because the key is, you're dealing with their money. And
yep.
I look at a lot of bank. If your bank is closed 3-4 months out of the year, why are you putting your money in the bank then? You got no access. So before we close out, unfortunately, because of COVID, we definitely know that there's some scammers and just basically some trifling people out here that are financially taking advantage of mostly our elderly and our most vulnerable. what's some advice or some look fors that you suggest for people as we try to move forward and past COVID?
Do you remember the old adage, if it sounds too good to be true, it probably is not true? Yeah, that's still around. And people, scammers don't have any compassion for anybody, regardless of age, regardless of their mental health, regardless of their sex, gender. They don't, they're coming after you. And as a matter of fact, the funny thing is they are going to come after the most vulnerable. That's it. That's it. And Derek, stay away from any tax advisor who promises you a refund before he or she has even seen your tax return. Stay away.
Say that again, because I want the audience to hear this, because there's desperate times, people do desperate things. And
yes, they do.
I don't want to see all of a sudden a GoFundMe account because you got took. Say it again.
Yeah. Yeah. Stay away from any tax professional who will promise you a refund before he's even seen your situation. I promise you that's a scam. And it's even harder to perpetrate that particular scam now with the Tax Cuts and Jobs Act that was first implemented for tax year 2018. Why? Because many people can't even itemize anymore. So if a person makes you that promise, is the third time I'm saying it in the last 42 seconds, if a person promises you a big fat refund before he or she has even seen your tax return, run in the opposite direction. Please don't get taken, because that's what's about to happen.
All right. So, as we close, for that person that says, you know what, I think I'm going to take some of what Teddy said, and I'm going to go ahead and try to start a retirement plan. Now, whether they contact you or they contact whatever, contact my man Teddy. I'm just telling you, I'm throwing it out there. But what is that little thing they can start doing now to get themselves prepared before they get to you or another tax?
The little thing that they can start doing now is check with your HR person and say, hey, do we have a retirement plan? Do we have a 401k? Do we have generally speaking, if it's a nonprofit, it's probably a 403b. If you work for the government, it's probably a TSP for the federal side, or it might be a 457. None of that really matters. What really matters is you have access to whatever it is. Start contributing now. And Derek, guess what? Most of the companies that have a 401k will contribute for you. So if you contribute 3%, they'll contribute 3%. So wait a minute. Who wouldn't take advantage of something like this? You're telling me that at the end of the year, 6% of my salary is in my 401k, and all I did was contribute 3%? Yes, that's what I'm telling you. Your company is going to contribute, let's say 3%, because it differs depending on what company. So your company is going to contribute a portion, and you're going to contribute a portion, and you didn't have to do anything in order to get them to contribute except contribute yourself. It makes no sense. Let me calm down. It makes no sense for you not to contribute to your company's 401k, 403b, for government work, federal government workers, TSP, or what have you. It makes no sense.
And
contribute now.
And that is, and for those that are watching that man said, I don't know. And I only can speak from personal experience. And Teddy knew my resources from the time that I was going the whole way through. And even before I got married, I wish that I was more aggressive with it. Right now, I wouldn't say I'd be retired, but I could pretty much say I have to do what I want to do.
Yep.
But I got to wait 10 more years, which still isn't that bad. But had, even when I was in the military, if I had taken those drill checks and put 50% away, I'd spend it on, I don't know what I would spend on. I had nothing to show for it because there was no TSP for the National Guard back then. I believe now they have TSP. But either way you look at it, for those out there listening, and people always say, well, I can't take it with me. Well, if you can't take it with me, then look out for those that you can give it to. It's the money in which I have, if I pass away, it'll be passed on to my kids, passed on to my wife, passed on to my daughter, passed on to whatever.
Yeah.
So yeah, I can't take it
Yeah.
with me, but somebody else can benefit from it.
Yep.
And I'm in a fortunate situation, but I know other people are not. So that's why I'm trying to at least bring a form or a platform to them so they can say, you know what, I don't have a lot, but I can start with little and build myself up. And you
Yep.
got a great person and Teddy the tax man. And if you tell people how they get in contact with you, I definitely will have it on the post. And if they
Okay.
look for somebody to get themselves started.
Okay. You can call me at 410-931-2004. And let me repeat that. 410-931-2004. You can even go to my website, which is huntvalleyretirement.com. Retirement has an S on it. huntvalleyretirement.com. Let me also give you my email address. It's Teddy at huntvalleyretirements.com. Once again, Teddy at huntvalleyretirements.com. And one of the last things I want to say is, if you have left your job for whatever reason, fired, quit, retired, whatever the case may be, reach out to me so that I can help you to develop a rollover strategy. Because the one thing I don't want people to do is leave their jobs and then leave the 401k behind. That's probably not the wisest move. When you move, you want your money to move.
And the other thing is that some people, if like they quit or get fired, they just may forget about that money. And that money is sitting there. Like literally, I forgot that I had money in Virginia. I forgot. I literally forgot. Now, I'm not saying it's not like the money was in my hand, but for the years I worked there, I was in the retirement system. And next thing I know, I got to stay. I'm like, where does this come from? I literally forgot. So
Yep.
put it like this. I was leaving five figures, big five figures out there.
Yep.
And had they not sent me the state, I probably would have figured it out. But when you move on, sometimes you don't think about that. So, I definitely appreciate you taking the time out of your busy day to come on the show and not only provide a wealth of information to residents where I live in Charles County, but Maryland, Baltimore, Hartford, whatever it may be, across the globe, because it's some good information. Now, it may vary from state to state, but we're talking about just things that affect you on your federal income tax.
No, yeah. Much of what I said is it doesn't matter whether you're in Kansas, whether you're in Missouri, it doesn't matter. 401k, 403, they're all the same. They are all the same. Has nothing to do with the state that you're in.
Okay. So, hey, it's been a pleasure. Looking forward to this year. I definitely, when we get back to some sense of normalcy, we got to hook up, break some bread. And remember, you don't have to, he's in the Baltimore area. You don't have to live in the Baltimore area to still get, look at the tech. We got the technology. We didn't have that back in the day. If I had lived way out here, I probably would have drove out there. But you don't necessarily always have to be there in order to get financial advisement, because my other financial advisor, I never met the person in my life outside of this. But hey, we appreciate you coming on the show. Anytime you want to come back, you're more than welcome. And be safe, continue to be safe out there, and tell the family I said hello.
Absolutely. You take care, all right?
All right, my man. Appreciate it.
Yes, I see you.
So hey, it's another show, another wrap, and hopefully you learn something and you gain some information, something you can use. Teddy is a good man, but hey, if he's not the person for you as far as financial advisement or retirement, there's somebody out there, and if and he can definitely point you to the right direction. So, as we close, I don't have a lot to say. The show was it was on point. So I really don't have a lot to say. But until next week, please continue to be safe, look out for one another, and remember, be kind. It costs you absolutely nothing to be kind. Now, it will cost you some money to start a retirement plan, but to be kind costs you nothing. Until then, peace and blessings.